go over some 3 new concepts. All right. So first up, I'm gonna get straight into this shit. We're gonna go to FVGs real quick. FVGs is the easiest thing I could show y'all. All right. So it's a 3-stick formation. Damn, where the drawing at? All right, 3-stick formation. So you're gonna have your 1 stick here. You're gonna have your 2nd stick here. Then you're gonna have your 3rd stick here. A fair value gap is the space between these 3 sticks. Okay. So boom. So it would be this bottom wick of this first candle to the top wick of this 3rd candle. And this would be your fair value gap. So what you could do with fair value gaps is very simple. There's 2 ways to trade them. You could trade the, god damn, I can't spell for shit. You could trade the, oh my god, I'm sorry. You could trade the respect of the gap or the disrespect of the gap. All right, we're gonna go over these 2 very quickly. This shit very simple. Like after I show y'all this shit, y'all gonna be like, okay, cool. Let me get this shit off the screen. Okay, boom. So say like this is a bearish fair value gap. Let me get my shit down. Brush. So bearish means that the market is going down at the time. So on chart, this is what it look like. Where is it? Where is it? So the path right now with these 3 candlesticks, boom, is like this, right? So this is one thing you could do with a fair value gap. So you see that we have this gap here. So if it's on a higher time frame, like 15 minutes, 30 minutes, an hour, that fair value gap is going to be the more key fair value gap. As in a 1-minute fair value gap, it's reliable, but it won't be reliable at times. Niggas use 1-minute fair value gaps. Is there a liquidity or some sort? I'm gonna go over liquidity as well. Very simple. What you need help with? What's a liquidity, bro? I got you. Right after this. Right. So boom, fair value gaps. Right. It's the space between these 3 candles, and it's the space between that 2nd candle. All right. So how you could trade a fair value gap is if the market is coming down, it's very shifting very down towards the downside. It's a downtrend. A fair value gap is the respect of the gap. So it could come right here to this 50% and come straight back down to clear out these lows right here. Okay, so this is what you would like to see with a fair value gap. And how you would get a trade off of this is very simple. So you will wait for this pullback. You'll wait for this pullback back into this gap. And once you see the pullback, you will push your stop. You will push your take profits down to these lows. Boom. And you will put your stop loss right above the fair value gap. So if it's a good fair value gap, it will always respect this 50 percentile of this of the gap. And this is how you set up your rectangle. So the border, you'll add the middle line, and the background would be whatever background you like. But the middle line is basically like what you want to be respected. I'm gonna show some examples of this as well, but I'm gonna show you how you could use a disrespect of a gap to your advantage as well. All right. So say if we have these 3 sticks, same setup, same formation, we're going down, boom. So instead of respecting this, we come up, come down, and we blow straight past this fair value gap. Let me make this a little bit more clear for y'all. So we blow straight past this fair value gap. So what now? This turns into, instead of this being an FVG, it would turn into a IFVG. It's an inversion of that gap. All right, stay with me. So a fair value gap is where we respect this rectangle. We are respecting this gap. Where an inversion of that gap is we're disrespecting this gap. So let me make this like a more realistic approach. So how you would take a trade with an IFVG? Boom. Let's say if there's liquidity down here, we wipe out liquidity, we come back up into this gap, fail to reach it, come down, go past the gap, IFVG, we come back into it, and we keep raising higher. So you would take your trade right back at this pullback, right back into the gap. Your losses will be here, somewhere around this lower high that was set, and your profit could be liquidity to the upside. Very simple concept. I'm gonna show some real life examples as well, but let's move on to the next concept. If none of this makes sense, like I said, go back to part 1, go to the Discord. You know what I mean? I can't tell you a lot. I can't keep telling you the same shit over and over. I'm sorry. So boom, let's go to the next one. Or let me show you some real life examples first, since we still here. So on this chart right here. Oh my God, let me just get all this shit off the screen. Let me see a good one. Because of Trump bullshit, the market has been doing whatever. Let's see. All right, boom. Let's see. It's a good one if you could see it. So, like I said before, we have our three candles. 1, 2, and 3. This green one right here. 1, 2, 3. And with these 3 candles, we're looking for a fair value gap. And it's right there. The fair value gap is right here. It would be the bottom of this first candle, right here, that bottom wick, and the top wick of the third candle, which it doesn't have. So right here. So this would be the gap. So you will put your triangle right between this gap. Boom. And once it's tapped into this gap, you want to see, since we're on a downtrend, you want to see resistance from this gap and a trend lower. Okay. So as you can see, you can say it's getting disrespected, this, that, and the third. This is a 15-minute FVG. So as long as the candle, as this body, the body of the candle does not go past this 50% line, it's still being respected. So wicks could go in this box however it likes. It could disrespect all it wants. It could disrespect the whole FVG. But if this body does not push past this 50% and keeps going higher, then it's still a FVG. All right. Hope that makes sense for you. So if you see this chart, what you would do is, while it's fighting on this in the 1 minute time frame, you will wait till it keep pushing higher. You'll wait for a confirmation on a 1 minute, then boom. Your stop loss will be on top of this wick, never get touched, and you have chased lows for a session. Simple enough. So let me find a FVG for you, or IFVG, my bad. Boom, boom. Okay. What's a good one? All right, cool. So I'm gonna do a real analysis of this. So boom, let's say on this day, liquidity was at these highs. We swiped these highs with this red candle and started the downtrend to the downside. So the downtrend looks like come back down, and the downtrend is forming, right? How you could confirm that it's a strong downtrend is with IFVGs, right? So every pullback can lead with a gap in the middle. Pullbacks are a strong reaction from buyers in certain areas, right? We had support around this area before market that had been taken out. And as you can see, as I told you before, support will always turn into resistance if it's a good support. So as you can see, we had support in this area. It was bouncing off. We erased it, came back. It can't get higher than the support. Keep bouncing off. It turned into resistance, and we went down lower to take out these lows. Right? Simple enough. Okay. So let me show you the IFVG. So our IFVG is basically the same exact thing, but it would be a disrespected version of a FVG. Okay. So here's our 3 candle formation. 1, 2, 3. The gap between these 3 candles is right here. 1, 2. You will put your box in, your little rectangle. Anyway, you gotta put your rectangle here for your FVG. So if it was a good FVG, what you won't want to see is move higher, come in, boom, right? But with an IFVG, as you can see, we disrespected it, came higher, and disrespected it again. So on this chart, what we can see, we go down to a lower time frame.
No, that is a quality beef, bro. It's just like the name Angus beef. Like that shit just sounds so wild. That shit looks sloppy as shit.
Since we know that 15-minute FVG is there, you see that it goes down, taps right back into this FVG, and this is where you get your sell off right here. You go to the lower time frame. We go to your lower time frame, find your entry, and take out lows. Simple enough. Okay. So let me show it one more time.
That damn sandwich like a French dip. Surprised you even did that.
FVGs are to be respected. FVGs are to be respected. So you would see this here, this formation. Come down, boom, boom. That's the FVG for the bearish side, and for the bullish side would be the exact opposite. Let's move this. It would be come up, come back to this pullback right here into this 15-minute FVG, and keep going higher to liquidity.
Wait, I have a question. So FVG, right? That's like when, so let's say like the price, I guess like it reacts to the gap, right? Let's say it might go down, and it comes back to that said gap, right? And the IFVG is basically, it's when the price, instead of it going to the gap, it just blasts straight through, like it just goes like way past the gap, like further up. Is it like, is one, like with both situations, right? when one happens, like when either situation happens, is like one better than the other, or does it depend on like what's happening or like what you're getting?
So
Like if you understand what I'm trying to
yeah, so it depends on the market. So say if we're in a downtrend here, and you see a like right, let's see, cause shit, I could go over two things then. So all right, so but I'm gonna go through a whole thing off this one area. All right, so most of the time, Gary, this is what the market will look like, right? So you'll have before market entry, you'll have your accumulation phase where it would just stay between two areas for a long time. Boom, boom. Then you'll have your manipulation where it would go to either the downside to take out liquidity first or the upside to take out liquidity. So boom, as you can see right here, we're in accumulation right here. Put it down. And that's basically mean chop between two areas. So we're not in this little box. We've been in this box from 7:10 to 9:15. Nothing has been going on for these 2 hours. And you would not trade anything in here because this is just pump fakes. This is just 5-minute pump fakes for the whole hour, for the whole 2 hours. So once you see a reaction off these levels that we're inside of, you see, we go down and we have this 5-minute FVG here. Right. So candlestick formation, 1, 2, 3. It would be the bottom of that third wick for the bullish FVG, where we're going up to the top of that first wick, right? So as you can see, without me even showcasing it for real, we get out of this accumulation zone that was in before. We blow right past it to take out whatever liquidity was up here, probably like right around here, right? Because we was in this zone. So we blow past this, take out this liquidity, and we get this major move down. So when it reacts off certain levels in the market, that's when you want to see a FVG or IFVG take place. So if we take out everything that we need, we take out all the highs, all the liquidity on the buying side, like we bought all the way up here and it's like nothing up here. Now we're looking for a move down or a pullback down. So with this FVG formed right here, as you can see, we blow straight past this FVG to turn it to an IFVG. And once a FVG get disrespected or inverse, all you want to see is a pullback right into it on a smaller time frame, which we get on the 5-minute right here. Your stop loss would be if you got like that at these highs, and you would just take out the liquidity on the other side, which would be down here. So depending on where the market's going, that's where you want to take it. If say like right now we on a buying trend, the market's going up. Within these pullbacks, it could be a FVG in every pullback, right? FVG right here, touches, keep going up. FVG right here, touches, keep going up. And that's how you want to see a FVG works.
And a pullback is like when it's like, let's say for instance, it goes in like a downward motion, right? And then like in the next couple seconds, it spikes like all the way back up.
Yeah. So when the market would never move in a straight line, so you would never see this. And if you do see this, what would happen is we're gonna come all the way back up where this rapid move came from, reestablish. Then we're gonna see this. Okay, it's hard to explain. I'm gonna show you like right here. This is a healthy market, all right? So you will always see this. Come down, tap, pull back, tap, pull back, tap, pull back, tap, pull back. And until this get broken, right? Until we start buying, this what will happen all the way down, right? This will not change because we're in a downtrend. Once we get into an uptrend, all it will look exactly the same. Move up, come back down, up, down, chop a little bit within here, up, down, down. Okay. So even though this look like awkward, like how I'm supposed to tell the trend, if we're not taking out these lows that we just set on these strong guys, right? If we're still being support in these areas, then we're still buying higher, right? We're not we're not taking out any liquidity. We're not going down. We're still in an uptrend. This is going to take longer for that uptrend to form. All right. So now that FVGs is done, I went through AMD a little bit. I'm going to go through OTE for a little bit as well. But now I'm going to show y'all a real trade. So this is from Tuesday. I remember this trade. I couldn't get into it because, fucking work. But I seen a lot of niggas get into this trade and it pissed me off. I ain't gonna lie. So boom. So every day, this is what you gonna do. You're gonna go to your higher time frame.